Good evening, everybody. Okay, today was one of those nothing days. I mean, the market started out where it was up 7, down 10, up 12, down 8 for most of the day, and then started trading positive apparently going into the end of the day. The NASDAQ, on the other hand, traded up and down a little bit, and then backed off 20 points near the close. So not really anything showing any major change of investor sentiment. But we do have the prospects that on the NASDAQ, maybe it's drifting back to the T-line. But if it does, and the Dow continues higher, it still tells us that the overall market trend is still just heading slowly up. Crude oil, as we saw from this big down day, broke the trend after 4 dojis and some indecisive trading in here. Right now it's trading down a penny, so it's back to $68 a barrel, and if I can make it smaller yet. Kind of a trend channel, so not unlikely that they could bring it all the way back down to about the 65.50 area. Let's see. All right, I'm supposed to remind people that this weekend we are going to be doing the training session on keeping your emotions out of your trading and taking care of some of the emotional mistakes that most of us have in our investing. So it's something where you all, and I say you all because I was the same way, you all know what to do based upon the mechanics of candlestick charts, but then our hopes get in there saying, man, I hope it's going to go right back up again, that this is an aberration of a trend. So this would be me, uptrend, uptrend, uptrend. Then I'm happy making money in an uptrend, and then it closes here. And I'm thinking, maybe it's got just pulled back. Let's look for it to hit up again instead of saying they've closed below the T line. So if I do what the charts tell me, I'm way ahead a good percentage of the time. Let me take a look. I haven't taken a look at gold here recently. It's still drifting lower, so that makes the gold stocks not worth looking at. But some of the crude oil stocks like Whiting, can't tell, is that looks like a trend kicker type signal to the downside. So if you just use common sense, saying, all right, they're selling off the crude oil, now they should be selling off the oil stocks. So let's go through some of the ones that we're in. OPK has not been able to close below the T-line. It became a very good chart when you could see the slow curve supporting off the 200, staying above the T-line, and breaking out of this wedge formation. When do we close this out? When we see a sell signal and a close below the T-line. KEM. Nothing wrong here. Just a slow, steady uptrend. Looks like wave 1, wave 2, and wave 3 of a J-hook. Wow. Hasn't been real exciting recently. But you can see the J-hook pattern setting up. A pullback, and so this is one where I always tell people, observe the obvious. If you realize that nobody other than us AK, we'll take a look at that in a minute. Would you have sold Chem on Friday on the 10-minute chart? Let's see, today's, no, not necessarily. Right here? No, not really. Remember, the first criteria on Friday on the 10-minute chart. I can't even, oh, that's a 5-minute. Oh, I can't figure out which one was 10-minute chart. That's 6-8. That still wouldn't show anything on the 10-minute chart. And the reason I wouldn't be going to the 10-minute chart is this what you were referring to? Friday, Thursday, Wednesday, Tuesday. Clear sound, all right. You could have, if you were trading it, again, where would you not want to see this trade at all? Obviously back below the open of this candle. So if you're trading it, you would have closed it out there, and then you would have been buying back probably even today. If you were holding on the basis that you were going to stay long until it closed below the T-line, obviously you stay with it. Now, should have closed out here. You should have been buying back here. Now, you might have been at the same level, but the only difference is when you closed out here, it was going in this direction. When you bought back right at that level, it was going in this direction, which means you took out the risk factor of holding on to something that might be heading in this direction. Oh, Chem, is that the one? Oh, man. Oh, and Friday on the 10-minute chart, yeah, you got to remember the reason we use the 10-minute chart is when you start moving exuberantly away from the T-line. This was still just kind of trending up right along the T-line. Now, there wasn't anything on Friday. Now, it was an aggravating day, but, yeah, wouldn't have sold it because there wasn't, first of all, there wasn't anything real extensive. Now, if it had opened lower today, yeah, that would have told you they're backing it off. Okay, Chem, okay. I got it. Now, let me take a look at the 10-minute chart. Was this Friday? Must have been. No, I don't know what Friday is. This Friday. Anyways, I didn't sell it only because it wasn't anything severe. It was starting to do a sell signal, but it didn't, obviously didn't confirm. And it wasn't that excessively away from the T-line. Let's see. The ICR still working well ever since it bounced off the 50, came up through the T-line. So now what you have to do is watch to see what it does here. So you saw that it hit this level and backed off. So if it started trading lower tomorrow, we'll take profits on this because that tells you they hit the resistance level, which was apparently at $52. AAOI, another one that is still looking good in the sense you got this fry pan bottom type pattern. Why do they keep that on there? You stay long on this one. Obviously, you're watching to see what happens in this area to make sure it can break out. SPPI, another one that hasn't done anything severe enough to say, let's close it out. and we can observe the obvious, which is the T-line is still acting as a support level. Now, this is the reason you want to kind of use your anticipation of what should be happening at specific levels. We recommended this stock today because of this little factor right here. It broke through this level, and even though it didn't trade higher today, it's still got a very good prospect that if it opens positive tomorrow and does a doji sandwich, it's moving away from this, telling us we've got a wave 1, wave 2, now going into wave 3. We recommended ITGR. There's your observe the obvious. Right here, pretty much at the breakout level, it broke out. So it didn't confirm today in the sense that when it opened, it immediately started trading lower. So what's that do as far as telling you whether to be buying or not buying? Well, obviously, what are we looking for after they open it positive? We want to see the buying. Let's see. In the case of the car, when would you have sold? I mean, on what bar and when in the day would you have sold out of that stock when it started to go into the J hook? All right, let me go back. The ICR. This is the 10-minute chart. Take a gander here. I'm not reading it. 10-minute charts very well. It's just the if you were day trading this or trading it, I would have closed it out right in here. After you had a bearish engulfing closing below the T line. But remember, it's still, well, I guess that would have been a significant place if you were watching that when it hit the 52 and started selling off, and maybe you'd been a little bit more clever and closed it out here. Oh, on the 15-minute chart, same scenario. Probably when it closed back below the T line. So again, you can, whatever time frame you're trading or want to trade, you can use any chart configuration. Here's the 5-minute chart. Maybe if you're a more active trader, you started selling out here, anticipating the 5-minute chart was bringing you back down to the T line on the 5-minute chart. But what would have been the instigation right here? The fact that you could see that it topped out right at the same level it topped out before. Armando, let me get through these, and then we'll get to some of the other ones. Except we have INSEE in here somewhere. I'll do INSEE here in a minute. Roku backed off a little bit today, but you can still observe what the trend is. Still kind of a J-hook pattern. That darn thing is enough to make you. So we still have probably a wave 1, wave 2, and notice how wave 3 started to gap up. So you probably just want to hang on to this one. MNK, you stay long on this. Now, remember what usually happens. This up here is just the delayed. I don't pay for the live on these charts because we've got too many other charts that is less expensive getting alive. So this is just being delayed, and so at the end of the day, there's no delay because everything's closed. But remember what our price movement usually does. If it breaks through a resistance level, they'll usually come back and try to test it to see if it's going to act as support. So right now you're seeing a little bit of selling, so you get a little bit more suspicious that maybe there's going to be some profit taking. So this one might be that if you see weakness tomorrow, you start taking some profits, but you watch what happens right here at the T-line and the 200 to see if the next J-hook pattern is setting up. INSEE should have been probably closed out today. If not, if it opens lower tomorrow, you close it out. Because once it broke up through, then you started seeing 3 doji type days and a bearish engulfing signal. Even though your stochastics aren't up in the overbought area yet, it's telling you there's weakness here. So if you were long and you did hold on to it because it closed above the T-line, got a very simple strategy tomorrow. It has to open positive and trade positive to stay in it. If it opens and trades lower, what's it telling you? It's telling you it's confirming the signal, and look at what the overall trajectory is doing. It's kind of rolling over. Did we do MNK? Yes. And then this one got 2 different types of scenarios when you're trading. You can be buying the stock, but the problem is that maybe buying the stock when you know that it's a big percentage mover may not be the best criteria. It might be you buy the options. Now, the other problem with one of these is if they're not trading 1.5 million shares a day, and I don't forget what it's trading, it wasn't trading very much, you might have a problem getting in and out of the option. So your option strategy will be that if you can see that it's not traded very much, it might be that you're trying to buy an option where they're bidding $1.20 and they're asking $2. Well, what you really have to do at that point is say, all right, halfway in between is $1.60. Let me put a bid in at $1.65 and try to catch it right in the middle. The other thing I do is if I put it in at $1.65 and in approximately 5 to 10 minutes they haven't executed it, I close out close the trade because if it's going to be that hard to get into, it's going to be very hard to get out of if things or if this turns against you and you need to get out, you're going to be getting out at the bid because the low volume has the market maker as the person just battling here. The market maker will have control of what you get for it on the bid side or getting out. Did I not talk about INTR? You finish your thought regarding what you wanted to see. Well, you want to see that it opened positive and started trading positive. Because what's this tell you? Fry pan bottom breakout, we should be in the next good wave. But what do we want to see as far as our entry strategy? So it's broken down into 2 analyses. One, we know we should be heading higher. 2, we can kind of fine-tune it a little bit to say, all right, open positive and started trading lower, and buyers aren't there yet. Where is my optimal buy spot then? Right back up here where it opened, because logic says if it opened up here today, came down, and then came back up through the open, who's winning at that point? The bulls are bringing it back up. On the other hand, let's say tomorrow it does a doji, and then when Wednesday they do positive trading, comes up through that level. That tells you the profit taking's over. The strength of the pattern is now going to be in a continuation. Since the dark cloud encompasses the wick and the bearish engulfing just the body, is the dark cloud more ominous signal or not? Well, remember, the dark cloud closes below the halfway point of the previous candle. Now, is that more ominous? Nah. They're both sell signals. And it fits into the description of where everybody's asking what's the most powerful signals. Well, they're all powerful signals. Remember, we've cultivated the 12 major signals down from the 50 or 60 that's in the candlestick universe. So it doesn't matter if you're trading a stock and you see a dark cloud, or if you're trading the same stock and you see a bearish engulfing, it doesn't matter. It's telling you the sellers are starting to take control. Get ready to close out that position. So, let's see, back to when I'm looking at something like this. Look at this stock. This went from basically 9 to 15 in 3 days. That's a good 65–70%. That's also telling you there's a lot of volatility. I mean, they could move this around pretty quick, like here, where they opened it up at 27 and closed it at 18 or so. Same scenario on II or INPT. We were buying this on the basis that there's a lot of volatility in it. But instead of buying the stock, we're buying the calls. Because what's the rationale for doing that? Well, I started buying calls over here at I think $1.20 to control this for, let's say, 1,000 shares. So I forget what that was, $1,200. Well, it got slammed down here, so fortunately I didn't have a very big position. But at worst, I lost $1,200. If I bought the stock in here at the $22 or $24 area, shoot, you just gotten clobbered. So when you have situations where the volatility can go wickedly one way or the other, that's when you want to go with the options. Netflix. I think it was trading, where was it, down here after hours. So here's a situation where everybody says, well, do you buy or sell going into earnings? But if you go back to your basic statement about candlestick signals, which are the accumulative knowledge of everybody buying and selling during a specific time frame, well, if they're buying going into the close, or if they're selling going into the close, that means somebody that probably has a lot more insights into what's going on with that stock or what the projected earnings are going to be. They're making their decisions, and it's usually the right decision. So what was the message today on Netflix? Pretty much absolutely nothing. We're trading below the T-line. It's doing a doji type day, so there wasn't any decision between the bulls and the bears. So which way was this going to go on earnings? Had no idea. So if you are planning to buy, or if you are planning to hold, well, you had to go with your basic rule that as long as it's trading below the T-line, it's in a downtrend. But if you are holding it, either long or short, what was your analysis at this point? Didn't know which way it was going to go. So what's that do as far as your investing? The whole point of using candlestick charts is that it gives you a probability by assessing what happens in the past of which way a price move is going to go. If you can't tell, now you're just speculating. So from this point, it could have gone up, could have gone down, it could have gone this way based on that information. that doesn't give you any great advantage of which way it's probably going to go. So I looked at Netflix earlier in the day, and unfortunately I wasn't here at the end of the day. But even at the end of the day, I would have looked at this and said, are the Bulls or the Bears coming into this? As you can see, neither. I told you nobody knew which way it was going to go from that point. Let's see, look at some of the other biggies. Apple, slow uptrend, but not anything real exciting at this point. Amazon, it backed off. Did a doji type day. It was up, you can figure this out, it was up 20 some odd points during the day. Where is our expected target on this? I think we did this before. Oops. Kind of right here. Oops, got closer than I thought. So it actually touched this upward trend target with stochastics in the overbought area. Amazon is selling off after hours. Okay, it's got to probably be in sympathy with Netflix. I would think. Yes. Well, your probabilities, yeah, the Japanese race traders say if you see a doji in the overbought condition, and in this case, if I had been trading Amazon and I saw it right here, right on this level that everybody else could see was a resistance level, yeah, I would have flipped to my 10-minute chart. And it was getting close. They had a bearish engulfing signal once we get up pretty close to that level. So the Japanese race traders say if you see a candlestick sell signal like a doji in the overbought condition, get ready to take profits. Whoops, that's not what I wanted to do. So if this opens lower tomorrow, which somebody said it's already selling lower, if you were long Amazon, you probably want to close it out because it hit the resistance level, did a doji, and notice what type of doji it did. Make this even bigger. They gapped this up in the overbought condition and then backed off and did a doji. If they open it lower, where's your next likely target? Here. Now, remember what the simple rule of a doji is. That they're going to move it in the direction of how they open it after the doji, number one. But number two, when you see a doji in the overbought condition, you get ready. Sell means, yeah, get out, not necessarily go short. So if you want to go short, you definitely need to see a confirmed sell signal. Let's see. And so the same scenario that we were kind of implying today in the afternoon newsletter is there are times, like in NVIDIA, when it tells you to be long, to be short, go long, and then there's sometimes it says, get out of this, it's not going anywhere. Move your money to someplace else. Same, Tesla is more of a directional. You can see what's happening with Tesla. It came back up to the T-line, the 200, the 34, and they're failing. So where's your next likely target? Anything that we can see that could probably be a target is right here. Anything that we could see that would be a pattern, like a wave 1, bearish J-hook pattern, wave 3 being approximately the same as wave 1, that makes that your likely target. Now, does that necessarily mean it's going to get there? Definitely not, but at least we can assess where the likelihood of a candlestick pattern should probably take you. Again, when you make that type of assessment, now you're not just kind of whistling in the wind. You've got a reason to be, let's say you wanted to short this tomorrow. If I was going to short Tesla tomorrow, I'd probably short it if it came back down through today's low. That would confirm that they're still selling it off and this is my target. So if I can make an assessment based upon a recognizable pattern, if it came down through there, now what becomes my criteria? It should be going this direction. If I short it right here and it came back and closed up here, what's my assessment about this direction? It's gone. It now looks like it's supporting supporting at the 50. Not necessarily a reverse scoop, more of a bearish J-hook. Okay, if you want to trade the crude oil, that's exactly what I didn't want to do. Well, OILD worked over on, that was a reverse crude oil. But that's crude oil right now. It's selling off pretty hard. I think crude oil, oh, I can do it right here. Oh, we looked at this one earlier. Crude oil backing off from the $75 range now to back down to the 68. The Stochastic's still coming down. I'd look for that being the first target. Oh, SCO. Yeah, there you go. All right. So that's the short, the Bloomberg ultra short. So that's a way if you want to short crude oil, but you don't want to do the futures. You buy and you don't want to short anything, you buy the pro shares on the crude oil chart. ADT is a good-looking chart because you can see exactly what was happening at the 50. Again, here they came up, they did the bobble breakout, they pulled back. So this is where the visuals of candlesticks just make it so much easier to see exactly where reversals are occurring. A hammer followed by a bullish engulfing, or kind of a left-right combo, right smack dab off the 50. Next day they bring it up through the T-line. What do you think the probabilities are now that it's heading higher? Extremely strong. OPK, yes, did a left-right combo, and so that told us we were selling off. Now, if you were long this, there was your stop. Right there at the low of the doji, because logic says if they could start selling it off through the low of the doji in the overbought condition, and that one's gotten a little bit away from the T-line, put a safety stop right there. Because where do you think the next target is if they come through that level? Back down to the T-line. If you're thinking about getting back in, what do you want to see after this kind of hammer harami? A positive open. That tells you you can start buying back in. Isn't that going to be about the same level or maybe even above where you got out? Yes, but the insurance was that you weren't holding on to this that was heading in this direction. You could see that it was consolidation, and now you're back in it. Back to the old scenario that if this is a 10-point move and you only get 8 points of it, but every time you're in it, you're in a positive direction, the compounding effect of your portfolio is going to be much huger, if that's the right word, huge, than trying to get or stay in from the absolute bottom to the absolute top. When it's almost a kicker, but with no space between the candles, when they overlap a little bit, is that still a strong signal? Like a major signal? No, it tells you, which one were you referring to, Guy? remember, if it's not quite a signal, the implication is maybe it's reversing, but it's not a true candlestick reversal. So if I saw something that looked, there was a few days ago where a lot of them bounced back up, but what that told you is more than likely they were a bounce. Jay, I don't know what Uyghur is. Uyghur. Now this is a good looking chart. GOL, because of the slow curve gap up. Next target is likely going to be the 50, and you just watch to see what it does from there. Okay. Let's see. ZTO, another one that's, now, see, this is not quite a kicker signal. Still implies there's upside. In this case, based upon the pattern, that we've got kind of a fry pan bottom breakout. But remember, a true trend kicker would have been had it opened at or above this level and gone higher. Now, does that mean that when you see something that closed here and then open not quite above the previous day's open and goes higher, that you should disregard it? Definitely not. But the other side of the coin is, with the amount of signals that you can come up each day based upon simple scanning of candlestick signals, I'd rather go with something that has been proven over the last 400 years to be a true reversal versus something that might have some upside to it. BTL, observe the obvious. Kind of supported right there 3 days in a row. Came right back up with a Morningstar signal. What are we anticipating from here? Probably a J-hook pattern. So I say probably a J-hook pattern. Probabilities are this one's still heading higher. And this is all part of that function that if you can keep finding positions where the probabilities are heading higher, every single one that you come across is not going to head higher. So the cultivation process is, tomorrow, if I'm buying this one based upon it confirming a J-hook pattern, at least I know the probabilities are in my favor. Are there going to be times when it opens higher, trades higher, and then closes down here? Definitely. But those are where you have to cut through your emotions and just say, all right, this didn't work. And the biggest thing that helped me cut through my emotions was finally realizing that probably about 1/3 or 30% of my trades aren't going to work. Remember, CB, stochastics have a different classification or different function if you're looking at the pattern. A J-hook pattern is probably going to have stochastics somewhere either halfway up or above the halfway point heading back up. Remember, the pattern is the first thing that we're buying. The Morningstar is just kind of confirming, adding confirmation to the pattern. All right, so there's other ones that we're watching. They're fry pan bottom setups. Here has been kind of in that realm now for a few days. It can be bought on positive trading from here. You pardon the redundancy. Melly, you can see what happened on this one. A nice fry pan bottom and a breakout to the upside. Once again, notice how this breakout occurred. There's your J-hook type pattern with a Morningstar signal, bobble breakout, confirming your fry pan bottom. The more evidence that you can put in to your analysis, Again, the Morningstar signal, right off the 50-day moving average, doing a J-hook, potential bobble breakout, confirming the fry pan bottom. That just puts you in more or a higher probability that you're heading higher. The fry pan bottom, at this point, you just stay long until you see a sell signal. Where would be a potential target? Right about here. There's a gap right there. Will it go straight up? Probably not, but you might start seeing a J-hook pattern or something else on the way. VFC. Here's kind of your little fry pan bottom breakout. This is what we're looking for, is the pattern and then the breakout to the upside. Remember, your patterns will have different situations for your stochastics. You won't see them in the overbought area or oversold area. Now, when you see a pattern, ARC or CRK, we got a fry pan bottom. What should we expect out of that fry pan bottom? A breakout. What put the kibosh on this fry pan bottom breakout? Well, there's a left-right combo right about the same level that it was supposed to be breaking out. What'd that tell us? It wasn't breaking out. It better open positive and trade positive if you want to stay in it. If it opens lower, you close out the position. Because what was the point of buying this one in the first place? That fry pan bottom potential. This negated it. So not only, and I'm showing this because the patterns will work with a high degree of probability. Yeah, this one was somewhat the same way. But when it came back down through the T-line, I told you that it wasn't working as a fry pan bottom breakout. That's not a real clean illustration. Tandem, same scenario. There's your J-hook fry pan bottom. Where were we looking for a breakout? Somewhere right in this area. And then what did we do afterwards? Let's make this bigger so you can all see it. A doji sandwich. So what started this uptrend? A left-right combo. A hammer, bullish engulfing. What was this telling us about the trajectory? It was turning back up. Yes, you could probably still buy this one. It's a little bit higher risk, but yeah, I wouldn't be afraid to be buying, because if this is wave 1, this is wave 2, and you're going into wave 3, it still has a lot of upside potential to it. And noodles. Here's one that is questionable. That could be considered your breakout area. They went up through it and then came back down. Now what do you have? Kind of a shooting star. So what's this tell you about a fry pan bottom J-hook pattern breakout? Well, if they open this lower tomorrow, that's telling you they didn't go through. Now you're probably in at best, a sideways wedge. You move your money someplace else. Let's see. Whose handwriting is this? You can see the fry pan bottom. You can see the doji sandwich. You can see where the likely target should be, right back up here. And TV, let's make this smaller. So there's our fry pan bottom. There's our belt hold. It's kind of still confirmed that we were heading in an uptrend. There's our breakout level, right about the 200-day moving average. What do we expect coming out of a fry pan bottom? A strong price move. What's a prerequisite for a J-hook pattern? A strong price move. So this is basically our classic setup you can be buying this one. There's our little Morningstar signal, J-hook type pattern. Definitely can be buying this one in positive trading tomorrow. All right, so when you see signals, they should work. There's our kicker signal. But look what happened to Pizza Papa John's today. It closed more than halfway down this candle. If you didn't close it out, at least give it the benefit of the doubt, but it has to open positive and trade positive tomorrow. Otherwise, what can you assess from this whole trend, even though you've had a strong kicker signal? You're in a downtrend that's been failing at the 50. That tells you your probabilities are going against you, especially if they open it lower tomorrow. What's your other strategy, even if they open it positive tomorrow? If they open it positive, it better trade positive. If it opens positive and starts trading positive, you put your stop right here. Because logic says if they take it up and then turn it around and bring it back to this level, the bears have won. You want to be out of that trade completely. Yes, we little scoop type pattern. Nothing fantastic. And I probably shouldn't even have bothered with that one. And prime water. This is observe the obvious. Where was the peak of this trade? When they gapped it up and did a shooting star, followed by a bearish engulfing signal. Then they couldn't get back up above the T-line. You should have been out of this trade. Where would have been a logical spot to put a stop if you were in seeing a gap up shooting star? And then they opened it positive the next day, you put your stop right there. Because if they come back down through there, you already have a hint that the sellers might be taking control. But if it opened there and started trading positive, man, okay, we're still in an uptrend. But your safety stop goes there because logic says if it came back down through there, the shooting star was the sell signal. Now you've got a little doji, spinning top, hammer, gap up. Where did they do it? Obviously right on the 50-day moving average. So what do you have as far as an overall chart pattern? Wave 1, wave 2, going into wave 3. Oh, for crying out loud. Let me take a gander here. Whoops. No, it was me. I don't know which symbol it was. It's one of the clothing stores. Okay, just a couple more. This is what we're going to be going into this weekend, is how to get your emotions out of your trading and kind of logically projecting what's happening. This is your warning. A gap up in the overbought condition. Doji, doji, doji. Oh, there it is. Thank you. So what was that telling you? It's telling you we're in an overbought condition and we're seeing lots of dojis. If that's a point where you can close it out, even though, say, wait a minute, it's still above the T-line. Yes, but at this point, which way is it going? 3 dojis, a gap up. What does the gap up tell us immediately? To start watching for sell signals. This just closing out the position and then repositioning yourself with a buy stop maybe up here would have protected you from something like this, that big downdraft. This is why learning candlestick analysis is important to realize. Again, I thought I attended the emotional training not long ago. Am I correct? Yeah, the training. CV, email Abraham and see if you've taken the emotional training. I don't know if it's the same. I just probably check to see if you've already done it. I registered for controlling emotion sessions for July 17 a week ago. Not having it anymore? No, it's this Saturday. Yeah. Fighting your fears, controlling your emotions. So this is part of also knowing what to do. This is a perfect reversal. There's your cradle pattern with a best friend gap up, a doji. What did we want to see after the doji? Positive open would have put us with a doji sandwich. After this, that would have been a perfect buy. But if you just logically ask yourself, what does this candle represent? That's pretty much telling you the bulls have taken control. This is exactly what we want to see on a cradle pattern. Doji, expecting more upside. The fact that they closed it more than halfway down this candle. Remember, the Japanese rice traders make it very simple. If this was the candle that told you the bulls are in control, and the bears are able to close it more than halfway down that candle, who's in control? The bears are still in control. And they close it back below the T-line. So they negated the force of the bullish candle and closed below the T-line. What's, no, I closed out the spread. Closed out the spread on that day. Because what's that, basically telling you? That trade didn't work. Close it out. Move on quickly. I don't know, did we do a little mini session? We may have done a little mini session on controlling your emotions. But this is the we promote it as a 4-hour, but expect 6 hours. Oh, no, how to eliminate fear from your trading motion, Tuesday, July 17th. What is today? Oh, that's tomorrow. Yeah, that's just going to be kind of a cliff note one tomorrow. Yeah, so that's just kind of giving you a feeler of what that we're going to go into much more detail on Saturday. Yeah, sorry about that, Diana. That 4-hour session lasted 7 hours. What am I? Oh, gee. Let's see. Let me do one more. Here's another one. That we could see what should we be expecting. Then we could see that I was doing like a little cup and handle. But what was the nature of the candle on Friday? It came up and failed again. So what did we need to see to confirm that cup and handle? Positive trading. If it opened lower and started trading lower, what was that telling us? They were still moving away from that level. Close out the position. Didn't want to end? Okay. And there was one more. Oh, the GIII. So that's a observe the obvious. A gap down. Where do most people sell? They panic sell at the bottom. Anytime you see a gap down in the oversold area, start looking for your buy signals. What's additional confirmation? 1, 2, 3, 4 indecisive trading days with a hammer hitting the 50. A close up above the T-line. What did we want to see the next day to be buying this one? Bullish confirmation. It wasn't there. What do we have now? Another hammer signal that just touched the 50 and a bullish engulfing signal. Now what do we have? This is what I call the little stutter step. You start seeing the buying, doesn't confirm right away, so you have a little stutter step, and then they start buying. And then look where they close this one today. Above your downward trend channel. This one you probably will see on the buy recommendation list tomorrow. Okay, that's about all I got today. This was kind of a summer day today in the markets. Even though the Dow traded up near the end of the day, look what it did all day long. I mean, that was just junk. You couldn't figure out anything, and it looks like during the last 40 minutes or so, they took it up. But I would suspect the same thing happened in the NASDAQ. Kind of drifted all day long. Not any real powerful selling, just the 10-minute chart just kind of drifted. Okay, that's about all I got. Is there any general questions on candlesticks? Oh, let's see. I thought we did VSH. It's one of the. Yeah, you stay long on this one. Why do you not look at the S&P? I do. Except I don't need to here. But I do. We can take a look because of the graphics of candlesticks. It's not like we have to do an extensive analysis. What's the S&P doing? Moving up, but we're now right about this level in the overbought area. We might see a little consolidation, especially if they open lower and bring it back down to this level. What do we want to see to really confirm the uptrend? Coming up through this area. So it's, yeah, each day we will look at this. I just don't bring it up usually here because it's usually pretty much does the same as what the Dow's doing. We could also look at the Russell, kind of now getting caught in a wedge. But the transportation index was significant today in the sense that they opened it and was taking it up and then brought it back down. So we see weakness in the transportation index, seeing strength in the Dow, seeing the S&P basically just traded flat, and the NASDAQ traded down. So what did that tell us about our overall trend? Nothing. But it's pretty much just some backing and filling today. Let me get this right this time on VIX chart daily. When would you have sold it? As it went off the peak and into the J hook. I don't understand where the J hook is. Are you talking about here, Bruce? Yes. Over here, when you were in the overbought condition, where was your safety stop? If you're in the overbought condition, your safety stop should be at the previous day's open. Logic says that if the bulls are in control, the bears shouldn't have enough force, especially in the overbought area and that far away from the T-line, to bring it back to that level. If they do, where do you think the first target's going to be? Down here. So that's where you would have stopped out. You might have bought here. if it was trading up based upon a little Morningstar signal, but what was our simple rule? If it closed back below the T-line, you're right back out, because what that tells us about the bullish strength? It wasn't there. It didn't come back until down here you started watching, in this case off the 34, you started seeing kind of a Morningstar signal. Remember, a Morningstar signal is a big down day, a day or two of indecision, and the third or fourth day closes more than halfway up that candle. On chem, well, you're getting prepared. And you're kind of at this resistance level. Let me see if I can do this. Kind of at this resistance level. But what's the number one criteria for watching for a reversal? Is a candlestick sell signal confirmed. So you watch it. Right now there isn't obviously any selling, but where would be a logical place now after a little doji shooting star to tell you there was too much weakness? Probably right back below that close again. You wouldn't want to see it start trading down there, because that would tell you they are rolling it over. You might, so it depends on your degree of not flexibility, but getting in and out of a position quickly. If you saw it opening lower and start trading down, you might take profits. Or more conservatively, you might take profits when it came back down through that level. When you expect bullish confirmation next day, do you usually wait, say, 10 minutes to check trading range? How long is usually too late? Usually you can see what the pre-market futures are telling you is going to be happening in the market itself. This morning, I think the pre-market futures, the Dow was either up 7 points or down 7 points. So you knew right away that there wasn't any great force one way or the other. On the other hand, if you wake up and you can see that the Dow is showing that the pre-market futures indicate that the market's going to open up 100 points, and you're looking at something like this where you're waiting for a breakout, and the market's opening positive and this is opening positive, yeah, it might be 90 seconds to confirm that they're still buying to come into it. Now, a lot of people say, oh, yeah, well, what happens when you buy? I'm trying to find an illustration. You think I've got one. A-C-I-O. Oh. The A-C-E-O. Oh, pshaw, there was one the other day. Well, this has a lot of examples in it. Let's say you're looking at this and it gapped up and trading up and you're buying it. It shouldn't close back below here. It should do what you expect it to do. So this is part of that cut your losses short and let your profits run. There's going to be, if you just tell yourself 30% of my trades aren't going to work, it's not because I'm stupid or can't read the charts well. It's just that usually about 1/3 of them don't work. So what do you do when you have one that doesn't work? You close it out and you move on to something where you get much better probabilities. Let's see. Would you have waited on CWH? No, I would have already told myself, that is not good. They took it right back up to the resistance level and did a shooting star. All right, if this is still in an uptrend, they better be taking it up. If it opens lower, what's that telling me? They aren't going in this direction. Close it out. So I may not have even waited for it to get to the T line. I would have just closed it out. Now, if the Dow was trading up 140 points and this was opening lower and trading lower, I might wait a little bit to see whether this is initial profit taken and they take it back up. But on the other hand, if the Dow is opening and trading down and this opens lower, yeah, that told me they weren't going in this direction anymore because of seeing this type of signal, number one, and seeing where the top of the signal occurred, right there at what everybody can see is a resistance level. Although candlesticks is the foundation, if we're hugging the T line, maybe just below, would a large portion of the bids, say 300,000 shares on an average day of say 800,000, influence you to stay and give it another day? Let me figure out what you just asked. If we're hugging the T line, or maybe just below, with a large position on the bid, obviously, if you see a bidder right there just below the T line, and if it does only trade 800,000 shares a day, yeah, I would say, all right, I got to get ready to close. But wait a minute, let's watch to see whether this 300,000 shares hold up, or whether it starts getting chipped away and they take it, they start eating it up, and they're selling into that bid. When it gets pretty close to disappearing, then they may say, "Up, now I get ready to close this out because there's not buyers here." Now, the other thing that a lot of people don't comprehend is prices move to volume. Now, if there's 800,000 shares being traded in a stock, and there's a bidder of 300,000 at a certain level, and it's right there, let's say on the bid side, who do you think moves the markets? It's not us that are buying 1, 2, 3, 5, 7,000 shares at a time. It's the guys that are buying 300, 500, 800,000 shares. Maybe not all at one time, but they might be buying 2.4 million shares, and it might take them a week and a half to fill that position. So let's say there's a bidder of 300,000 shares, and you're trying to sell your 2 million shares that you have in your position, and there's a bidder 15 cents below the market. There's going to be a trader, or one of your traders at Goldman Sachs or whoever you're using will call you up and say, "Hey, there's a block of 300,000 shares. The stock's at 21 and a half, and they're bidding at 21 and a quarter. Do you want to take it?" And somebody will say, "Yeah, let's go ahead and get rid of it there." So they will move to the price of that big volume. Yeah, but usually if it's a big player, if they're putting a bid in there, or an ask, that means they want to do something. It's usually in the smaller volume stocks that somebody might put a trades maybe 200,000 shares a day. Somebody might say, "All right, let's see if it's going to support here at the this price. I'm going to put a bid in for 40,000 shares." Well, if they start getting people, they may pull that bid real quick, because that means people are selling into them. That's probably heading lower. So, anyways, that's more of the mechanics of the bid and ask. what we're more interested in is what the overall movement of a price is based upon the signals. Whoops, I just been kind of babbling here for half an hour, longer than I expected to. Jim, let's go ahead and do the double line. And in 3.2 seconds, let's do the next double line. Okay, we'll run through these pretty quick. XLF. That came up nicely. That was kind of a reflection of J.P. Morgan coming up. Goldman Sachs, I think, came up pretty strong. So with, that was J.P. Morgan, your next one, all right? That's kind of an indication that if the financials are acting well, the market is still going to continue to act well. IQ doing a nice J-hook pattern. You can see your left-right combo. You can see where they were selling. They gapped down in an oversold condition. Now you're coming back up. I would suspect wave 1, wave 2, wave 3 should be coming back up at least to test this level and possibly going higher. That one I'd be a buyer. Wow. Something just bit my tongue, and it wasn't me. Shopify, stay long, but you've had a little hanging man and shooting star. What's that tell you? If they open it lower, take some profits. They're coming back to test the T-line. AMD, flat. That one wasn't good today. Oh, it feels like something just bit the back of my tongue. I think I swallowed a bug. But this one tells you if they open it lower, I'd probably close it out because that means they've run out of steam. Zoe's Kitchen. A little evening star. If this opens lower tomorrow, you can see that you had an evening star bouncing off the 34, which is a relatively indicative moving average. But if it opens lower with an evening star coming back below the T-line, you've run out of steam also. You want to close it out. Whiting, gap down today. You can be shorting this one on weakness tomorrow. AGN, another one that backed off right up kind of a congestion area. That could be a dark cloud. You definitely want to close this out if they close or they start trading it below the T-line tomorrow. And Dish, now I say sell it off tomorrow with Netflix down as big as it is. That's going to kind of put a negative pall over the market. So that might be pulling things back. Dish, if you're short, you stay short, but obviously watch what happens here at the 50. I am long and probably should have closed both of them out. Yes. Ron, this is where I kind of learned what the charts were telling me. Because I'd be owning a stock here, and I'm thinking to myself, what should I be doing with this? And it took me a while to realize, well, there was a sell signal and a lower close. And this was well before the T-line showed up. But if I'm sitting here thinking, what the heck should I be doing? That means I need to find out what I should have done. And that became my learning process to say, there's a sell signal and a close below the T-line. I should be out of this. So it doesn't take very many times to go through something like that to finally say, all right, let the chart tell me what's happening here and move on it. This one, this one would have been a toughie to get out of right here. But the fact that they closed it down here near the end of the day, I would have said, this is not a good-looking chart anymore. Yes, you probably should have closed out both of them. But I should say that's not because, or you shouldn't look at that and say, man, that was goofy not to. You should look at it and say, all right, what did I look at here that told me I should be getting out, so that when you see something like this happen again, you don't have to sit here and say, I guess I should have gotten out. Instead, get me out and move on to something that looks more like this. VRTX, nice fried pan bottom. Wouldn't be afraid to be buying this one on positive trading. See, I think we did Noodles. Noodles failed today. It started out nicely, but backed off. That tells me if this opens lower tomorrow and trades lower, close it out, because it failed up here. Oya. Morningstar signal, bullish engulfing. You stay long on this one. Where's your safety stop? I'd put it down here. If it came back down through that direction, you're not looking at a good looking chart anymore. Let's see, we did IQ, Tile Shop. This one came back up. You did the long-legged doji. You did a little shooting star gravestone doji, and then the selling. There's your evening star signal. That should have warned you to start closing out this position. Now, it's moved back to exactly where you would suspect it would have moved back to, a resistance level that is now might be acting as support. So you shouldn't be in it, but you can start watching to go long if it comes back up through the T line. I'm sorry, up through the 200. Under Armour, if you're short, you stay short. Just watch to see what it does at the 50. Coop. Well, this is where you observe the obvious. Where's your resistance level? Right about here. What do you do with this one? You stay long as it stays above the T line. Where do you put your safety stop? Just below the T line. You're getting up in the overbought area. So it's either going to break out or it fails. If it fails, you close it out, close out the position. CVRR. Nothing wildly exciting. You can stay long as it stays above the T line. Cassie. I wouldn't be long or short. That's a hard one to even kind of guess the direction right now. And V-Cell. Let's see. Sylvain, are you in here tonight? All right. Anybody? Anybody live in the Montreal area? How long does it take you to drive from Montreal to, say, Syracuse? V-Cell. Stay short if you're short. Oops. CELG. You stay long. You're in the overbought area. Have a safety stop. At this point, you might put your safety stop just below today's low. Logic says if it comes back down through there after your little hanging man on Friday, that they could be coming back to test the T-line area. Lab D. Trying to base, which means Labu. Let's see, this. You can be buying this one. There's Labu. You could be shorting this one on weakness tomorrow. REGN, another one. You had an evening star signal, doji, bearish left-right combo. I'd have a sell stop right below the T line. If it comes down in that direction, it's at least coming back to test the 200 to see if it's going to act as support. Apple, we did Apple. Apple's not doing too much today. Nothing yet to show you there's any change of investor sentiment, except you got indecisive, a little bearish left-right, but you're still trading above the 3T line. Yeah, it's not showing any great strength, but it's not showing any weakness. So for safety, put your stop just below the T line. Okay, KRE. That's a nothing chart. Is that the regional banking? Nothing there yet to get real excited about. Zynga. Paul, that's just a process of, I tell people, if you learn from your mistakes, I'm probably one of the smartest traders you're ever going to come across. I'm the type that doesn't like to make the same mistake 7 times. Zynga, that one is in trouble. That if you held on to it, it has to open positive and trade positive. Notice you did have a kind of a dark cloud yesterday in the overbought condition. If it opens lower, now you're looking at a kind of a potential wedge. Tapestry. You can buy this one. That's a good looking chart. Notice how it hugged the 50 until you see how the hammer, bullish confirmation. That's a good looking chart. ABEV, another good looking chart in the sense that you got the kind of the rounding bottom, doji confirmation. I'd suspect the first target is right here. Looks like there's a wee little teeny gap right there. So got more potential to the upside right now. We did lab running into trouble. Long-legged doji. This one, you put your safety stop right just below the T line and or just below today's low. If it opened lower, I'd probably close it out because you're seeing lots of indecision up here. Be ready to close it out on weakness. An XPO, this one you should be out of. Now you can think about going short because you have a bearish left-right combo. If I was going to short this, I'd probably put it just below today's low. If it comes down through there, it's kind of breaking this whole level. VMC, stay short. Oops, you had shorts on both of those. Okay, I just look at the symbol and forget to read what the comments are. Valero, stay short until you see a buy signal and a close back up above the T line. Hollyfield or Holly Frontier, boy, I probably wouldn't be long or short this one. Just not enough direction. I'd rather see it break out, but there's not a whole lot on that one. AMAT. Not a whole lot of direction either, but you can see you've got kind of a double bottom. If you're buying this one on positive trading, your first target is right here, which would be filling this gap. So if I was buying on positive trading, very simply, I wouldn't want to see it come back down below the T line. Micron, You can stay long, but it needs to stay up above the 50. If it comes back down, you're going to be kind of in a bobble pattern, which tells you it's not going to be real strong for the next day or two. Nike, another one where you're probably back into the trajectory. So you just stay long as this stays above the T-line. We did Whiting. You can short this one on weakness. Okay, IQ's down. How far down? Lou, I don't know what I don't know what that means. ZTS, yeah, you can short this one on weakness, except be careful. You've got something that looks like a wedge. I would probably be more apt to short this one if it breaks this level. Otherwise, you got a wedge formation in progress. So if you short it on weakness, just watch to see what it does at that level. Let's see, about 4 hours. Oh, I don't know what that is. DRXC. Doji sandwich. You can be buying this one with the expectation that you're probably back into this trajectory. Oh, okay. 6 to 7 hours from Montreal to... Okay. I know Sylvain came down last year from the Montreal area. I thought it was shorter than that. That's 3.5 hours to Syracuse. And then it's probably another hour and 20 minutes down to the lake. What if you came through Buffalo? Is that any quicker? John Lake's right in the middle. Oh, that's right. You do have to go through customs. Jay, I've been doing that. Except every time I try to pull up Google Maps, it says I need to upgrade something. And so I upgrade. And then pull up the Google Maps, and then it says I need to upgrade something. I've kept going around in that circle. That's why I was asking tonight. Aqua is trying to test the breakout level right in here. So I'd be a buyer on strength on this one. MapQuest, all right. Yeah, every time I tried to do it, they said I needed to upgrade to something. I'd click all the clicks, and it would say you're upgraded, and then when I'd pull up the map again, it'd say you need to upgrade, and somehow I don't have patience for all that. Okay, markets are still solidly moving up. Still have to kind of depend on each signal itself, but we've still got some good ones out there. Prime Water probably has a good MapQuest says that 4.5 hours to Syracuse or to Branchport, New York. Guess if it's 4.5 hours to Syracuse, all right, so it is 6 hours or so to the lake. And the reason I had somebody was coming in from France to Montreal and wanted to know how far the drive was. I thought Sylvain said he did it in like 3.5 hours, but that may have been just to Syracuse. Okay, everybody, have a good evening. We will see you bright and early in the morning. We'll see you then.